Hello, trading has closed on January 24th, 2020. We'll go over our calls, look for the pattern with the early high. This was it. We said usually it's a rally pattern, and failure is a straight line drop, and that is a straight line drop. We said unless this recovery was invalidated, early higher prices should print, likely getting to a new high. Well, we got higher prices. Best way to invalidate this move on Thursday would be to gap under it, but as I've said before, but did not say Thursday, gap in either direction, promptly undercutting it as an invalidation just as well. So we did get new highs, but we did get higher prices, but didn't get new highs. Monday's pattern has the early low. Note that after this all-day drop, we couldn't close under any of these relative lows. Well, here's what happened during the day. We had an ultimate sell signal that obviously worked. There's an optional higher target, and there's a 95% chance we'll see it Monday. 95% isn't 100, and if we gap down smartly, it probably won't happen. Otherwise, we should overtake the high of this bar. There was an ultimate signal here to buy in the afternoon and a lower target. MEJT said the move starting wouldn't stick. We still haven't hit the target, which is 3302.28. So for Monday, we have a target and also an ultimate target of 3302.28. That's my call if we don't gap down smartly. And a 95% chance we see 3326.81. Far away as that seems. Well, we had a big spike in the E-mini, and those are usually associated with market lows. You can see how that spike's associated with that low. It doesn't have to be exactly the same day, but it's usually pretty close. If you go to a longer term chart, this is the continuous contract. You can see how these bottoms and these lows tend to go hand in hand. Doesn't mean like here, you can still go lower, but as far as the day is concerned, there's a good chance based on this indicator that we had a short-term low. It's also significant that this drop could not take out any prior highs, any prior low. This low here was 3260.86, and we came within a point and still couldn't take it out. These are more significant, but we couldn't take out this low, couldn't take out the lows of the day. Until you take out some lows, we have to give the rally the benefit of the doubt. Now here's the long-term wave count that we'll talk about later. You take this 0.3, and we'll just remember where that was. Well, this is a 1-by-1 Gann fan line from the wave 3 high. And you can see how after breaking through it, we've just retraced right to that line. This light blue line connects these lows, these highs. I've shown it a number of times. Notice how it's right at the same point. So you have support from two different trend lines. We dropped to it, but not through it, and promptly reversed. So we dropped to support, but not through it. And the rule is you either gap under this low, gap under these lines, or the lines win. I think this alternate count's probably the right one. You can see 5 waves up. But now it's not too hard to see 3 waves down. There's your ABC. That doesn't mean we're going to start another 5 waves up. This just could be an A of a larger ABC. You won't know until you see the rally. You got to see if it's 3 waves or 5. But at least if this support does hold and we rally from here, you can count the decline as being over. Doesn't mean it's the only count. Well, Thursday evening and Friday open traded completely in the black. This is a time period dominated by amateur traders. Gains were immediately reversed and trapped them. Typically, it leads to an all-day decline, especially on the Friday. Nobody wants to step in front of a trend over the weekend. None of the amateurs do. So it's positive that after such a setup like this, we recovered all the day's lows, which means the decline didn't really accomplish anything. If that late rally was caused by short covering, we should resume the decline at the open. That means gapping down. If buying was done by professionals, the odds favor continuing the rally, ideally by gapping up strongly. Unless we gap down smartly, I think we're going to see higher prices on Monday. I think the MEJT targets will print. There were 2 possible technical reasons for Friday's decline. We had completed 5 waves up, and sentiment indicators showed too much optimism. We've now completed 3 waves down, and volatility indices now show an excess of pessimism, at least for the short term. The volatility indices measure how much money people are willing to pay for puts, and the more money they're willing to pay for time, the more money they're willing to pay in premiums, the more anxious they are to purchase puts, and these guys are usually wrong. So for Monday at least, bears need to undercut Friday's low promptly, ideally by gapping under it, to continue the decline, because the reasons for the short-term drop aren't there anymore. Indeed, I think Friday could have been a panic low. The volatility indices are well over their upper Bollinger Bands. If they reverse, which one of them already has, under the band, the buy signal is given. There's a volume spike. We dropped 2 but not through support from 2 major trend lines, and we couldn't take out any significant prior lows. So I think Monday's open is going to be interesting. I think there's a good chance we move up smartly and have a good rally, and that this ended the drop. And if I'm wrong, it'll be obvious before they open by gapping down under the low. I'm going to make another video today sometime. 2020 is less than a month old. I've already gotten 4 private messages about my long-term wave count. I have gone over my reasoning many times, but I have new viewers all the time. So rather than repeat it every time, I'm going to make another video called the Wave Count Controversy. Somebody sends me a message, I'm just going to refer them to that rather than repeating it every time. If someone has a different count, I don't care. You can use whatever count you want. I'm just going to go over the reasons why I prefer mine. So, for Monday, we have the pattern with the early low. Doesn't mean you won't gap up. I think this is a possible panic low, possibility of a good rally, going significantly higher, hitting new highs. And as always, if I'm wrong, it'll be obvious before the open. Now, anyone who wants to buy my book at a discount has a week left to get it at 25% off by going to the website of Harriman House Publishing and submitting his order for the book. Now, it costs under $50 any event, which is cheap enough. With a discount, it's under $40, and if it saves you money on one trade, I think you get your money back and then some. So we'll see how we open Monday, and that's today's call.